Good morning and welcome to the pre-market report for 11th July 2022. Now before I go into the video, I'd like to remind everyone they can subscribe to access my quant indicators plus my market guidance services so that they can end up trading profitably rather than consecutively taking losses without any market guidance, as you can turn your trading to be profitable. Now, firstly, we'll look at the news front. On the news front, there's only two major news. The first is that the RBI governor has announced that she expects the inflation levels to cool from October of this year, and I would put that largely due to the commodities slump that has occurred. So if that stays a status quo, then I do agree with him that it will occur. But if the commodity slump does not continue, then that will come at risk. The second news is a negative one, that the Indian forex reserves fell by $5 billion in the first week of July. So that is negative news, and then most of the other news is company specific, such as Adani taking interest in the 5G business and Mahindra wanting to invest in an electric vehicle battery cell manufacturer, and basically LIC gaining new market share in the April to June quarter. So now let's look at the charts. Now the first chart we're looking at is the S&P 500. Now on Friday I had highlighted a quant resistance level of 3,900. Last week, not only on Friday. You see that quant resistance level has managed to halt the index as of now, and the futures indicate that there will be some bounciness around this zone. Now, provided the S&P 500 keeps holding the support of the 7th July candle, then all is going to be good, and this will just be temporary bumpiness, after which we'll go towards the next quant resistance level at 3,990. Now the next one is the Dow Jones. The Dow Jones is exactly the same picture, as it has reached the quant resistance level of 31,345 and had a stopover. Now it will have to basically clear this zone, and it will also have to take support of maximum the 7th July candle. If it does, then we'll continue the upswing up till 32,110. Now today's article I have put on the IT sector, on three big IT names, so it will be interesting to see how the IT index will perform. Now when I open the IT index, and it reminds us a lot of the Nifty and Banknifty when it could not break above the resistance level. So the IT index is at that same point, and according to me, we may get 1-2 more days maximum bumpiness here, but we are going to be most likely crossing the quant resistance level at 28,620, and once we break that, then we'll expect a very sharp move to 29,200. But all that depends on us breaking 28,620. However, until we do not break that, we are trading within a box range that is between 28,250 and 27,540. So within that range, as expected, there will be dual-sided moves and some bumpiness, but as soon as we manage to break this, then we're going to have a up move until 29,200. I do not expect us to take long to break this. I believe we'll break it this week, and now it will be the only time to see whether we do so or not. However, if we break the quad support at 27,540, then we're going to be falling to 26,842 and much lower targets which are not given. It will be very important for us to hold the zone and break through, because if we break this support, then we're in real trouble for the IT sector. Now we come to the Nifty and Banknifty. Now the Nifty index on Friday I had given clients that the resistance level I had given clients was 16,260. I had even tweeted it at the end of the day that I had given clients two resistance levels. One is 16,260 and the other one is basically 35,200. Now those two resistance levels managed to stop the index right in the tracks, and that is why before Friday, on Thursday, I had said I'm selling. I told clients that I'm selling calls, and they can do the same if they wish. And that decision was correct, as we sold above this zone, and this zone stopped it dead in the tracks and brought it down. Now, as of now, SGX indicates that you're going to have a gap down. So we'll have to see how long that gap down sustains. But what I have advised is basically that this is going to be a very important zone, and we're going to bounce around this area and really test it. And if we break it, then there is another resistance I've given them. But there's a high likelihood now we will bounce between 16,000 and 16,260 in a big way. Only if we break 16,260 is when another move can come. Until we break that, do not expect any strong up moves, as that is a very important line in the sand. Now for the Bank Nifty, I had said 35,200 was the important resistance level, and that was basically the index was stopped in the tracks there. As we can see that it's even closed at 35,173. So now it will be very important to see if the index can break between 35,200 and 35,400. If you break that zone, then it can have a further up move. However, it's all dependent on the Bank Nifty being able to breach that specific zone in the indexes. So if the Bank Nifty does breach that zone, then it can trigger short covering in the Nifty. If it doesn't, then we just basically have to sit and wait as it wiggles around in the bulk range. It will form around this zone. So basically that is all for today. Thank you for watching, and do like the video and subscribe to the channel.